a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Leena Mishra, and today we are talking about semiconductor ETFs, one of my favorite topics. And semiconductor ETFs are among the top performing areas of 2023 because they benefited from the generative AI boom, but they are also the best performing ETFs of the past 10 years. And this year, they are the top performing areas outside of crypto. Crypto ETFs are at the top of the leaderboard. But in other areas, among other areas, chip ETFs are the best performing. Over the last 10 years, chip ETFs have surged at an annualized rate of about 25%, which is more than double the S&P 500's annualized return of about 12%. Now, these ETFs benefited from the generative AI boom because obviously these are the obvious winner. They provide picks and shovels for the AI gold rush. Now, Nvidia, which is the most obvious winner of the AI gold rush, because it has more than 85% of the generative AI chip market. This stock led the rally earlier this year, but lately Nvidia has not been participating in the rally, though it is up today as we are recording. Nvidia had passed $500 price mark for the first time in August, and it is actually down slightly over the past month or so. Other stocks like AMD and Broadcom have surged over the past month. So let's take a look at what's going on with Nvidia, other stocks, and chip ETFs. So Nvidia, as I mentioned, has 85% of those AI chip market, up over 240% year to date. Lately, the stock came under pressure after the Biden administration announced export restrictions on Nvidia's most advanced AI chips to China. So the company is trying to make lower performance version of its chips, which are targeted mainly for the Chinese market, but that news did impact the stock. Lastly, while even though the stock is up over 240% year to date, it is not expensive. And Stacy Rascon, Bernstein chip analyst, who is one of the best semiconductor analysts, he was on CNBC last week, and he pointed out that Nvidia is the cheapest among the AI narrative stocks out there because it trades at just 25 times forward earning, which is the lowest level since the end of 2018. And even AMD is much more expensive than that. The broader chip index is also more expensive than that. So let's go to Nvidia quote page on Zacks.com and learn a little bit more. So Nvidia is currently Zacks rank number 2 stock, buy-rated stock, and after it reported earnings last month, you will see that analysts have been raising their earnings estimate for the company, and that is why the stock has risen to the Zacks rank buy rating. Now, looking at the revenue, you see the big surge in revenue this year. The revenue has surged to over $18 billion from about $6 billion at the start of the year. And if you look at the earnings, they have also surged. So you see the big surge in earnings over here from the start of the year. So that is why, because the stock is growing so fast and earnings estimates have been rising, that is why it is not expensive. And this, so you can see from our report on Nvidia that the current forward earnings multiple is 25.1, which is lower than the sub-industries multiple, and it's much lower than the 5-year median multiple for the stocks. That's why Stacy Rascon called it that it is one of the cheapest AI-related stocks over there. So now, what is going on with other stocks that have been surging lately over the past month or so? So AMD announced its MI300 chips, AI chip, which will compete with NVIDIA's AI chip. This is the closest competitor, though even then it is a very distant second in this generative AI chip space. The stock is up over 117% year to date. So this chip will present the strongest competition to NVIDIA's AI chips so far, but still AMD is far away. And Microsoft, Meta, and Oracle have already announced that they will be using this AI chip. Broadcom is up over 107% year to date. Intel also announced that it will be launching its AI chip next year. That is, the stock is up over 7 to 76% year to date. TSMC, which controls over 55% of the global foundry market, that is up about a little more than 40% year to date. And the stock hasn't done too well compared to other chip stocks, mainly because of geopolitical risks. So you may recall that Warren Buffett had, in fact, bought TSMC last year, but they exited that position quickly, and Buffett said that it is one of the best companies out there in the world. But there are geopolitical risks because China may invade Taiwan, and that risk has been impacting TSMC's share price. Now, let's look at popular chip ETFs. So the largest ETF is by VanEck. The ticker symbol is SMH. This holds 25 chip companies, and it is market cap weighted. Has an expense ratio of 35 basis points and 11.6 billion in assets under management. Let's learn more about this ETF, but by going to the quote page on Zacks.com. So you can read our research report, articles, and using the link, you can go to VanEck webpage for this ETF. So you will see that it is pretty top heavy. Nvidia accounts for about more than 19% of its assets, and then TSMC is about 9%, and then Broadcom, AMD, and Intel that we talked about. The second ETF I'm highlighting is by iShares. This holds 30 US listed chip companies. This follows a modified market cap weighting scheme, and so it limits it caps its holdings. So top holdings are capped at 8%, and others are capped at 4% of the total weight. So that is why it is not as top heavy as SMH. Pretty popular with more than 10 billion in assets and same expense ratio. Invesco launched an ETF which follows a pretty similar index, and that is slightly cheaper with 19 basis points expense ratio and has 173 million in assets. So you could look at that ETF too if you want. Now let's go to the quote page on Zacks.com for this ETF. And again, you can use the link to go to iShares webpage for this ETF. So I was talking about the 10-year performance, and iShares has mentioned the 10-year annualized performance as well as the cumulative performance. So annualized the performance is about 23%, and which I mentioned, double of S&P 500's annualized performance. And looking at the cumulative performance over the past 10 years, the ETF is up more than 700%. Now, looking at the holdings, so you will see similar holdings, but weights are capped at the time of rebalancing. So you will see that Broadcom and AMD, which have done quite well over the past month, they are now among the top holdings, but they will all be brought down to 8% at the time of next rebalancing. The third ETF that I'm highlighting is slightly different because it is an equal weighted ETF. The ticker symbol is XST. So if you're worried about the top heaviness and concentration of other ETFs, then you can look at this particular ETF, and particularly smaller companies do better, then this ETF will do well. Same expense ratio and 1.5 billion in assets. Again, let's go to the quote page on SOXX.com, and using the link, we can go to State Street webpage for the ETF. And as I mentioned, this is equally weighted, so you will see similar holdings and some smaller companies. Also, everything will be in equal weights. Now, on the next slide, I have the comparative year-to-date performance for these ETFs. So, because of its concentration in top holdings, the VanEck product is the best performer, up about 71%. The iShares product, SOXX, is up about 67%. The equal weighted ETF is up about 36%, and the S&P 500 index is up about 25% year to date. And in full disclosure, I own SOXX and XST in the ETF investor portfolio that I manage. On the next slide, since we talked about the 10-year performance, the market cap weighted products are up about 800%, between 700 and 800%. The equal weighted product is also up about 700% over the past 10 years, whereas the S&P 500 index is up about 217% cumulatively over the past 10 years. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer. Also, make sure to subscribe to our YouTube video channel so that you do not miss anything. And I'll see you next week.